we're talking today about the end of emerging markets question mark, which is the theory that you're going to be putting forward. Before we talk about the things that are ending, can we do some definitions, and can you tell us briefly what actually, in your view, is an emerging market?
Well, so the official definition, the World Bank and bodies like that divide the world into rich countries, middle-income countries, and poor countries. And so emerging markets have tended to be those that are sort of squarely in the middle to lower half of that. But what I really mean by it are the category of countries that we've come to get used to, of which China is the most obvious example, but many Asian economies and also some in Latin America, some in Africa, that have grown very, very rapidly over the last 20 or 30 years. So during the high period of globalization, we got used to the idea, whether we were investors or simply observers or journalists like I am, that there was this category of countries called emerging markets that were going to grow very quickly and catch up rapidly to the rich countries in the West. And I think it's that idea which, in the aftermath, not just of the global financial crisis, but increasingly now in the aftermath of the pandemic, that's coming under a lot of pressure. The idea that countries are going to be able to catch up rapidly by growing at 7, 8, maybe even more percent than that in GDP terms.
So let's continue right there. You're arguing, and you have argued also in articles that you've written, that there's a sort of a special period that's coming to an end now. And you say, there's these countries that are poorer countries, lower middle income countries that were able to catch up very rapidly because they were growing really quickly. Talk to us a little bit about the specific problems that you see emerging markets are facing that may or will eventually lead to their decline or their falling back into where they were before.
I mean, it might, on the face of it, actually, it seems like a rather paradoxical argument, because in many ways, emerging markets, at least to this point, many of them have done much better than rich countries during the pandemic. So it's a strange moment to be talking about this. If you look at somewhere like Malaysia or Thailand, near to where I'm sitting in Singapore, they've done appreciably better than Britain or France in terms of their management of the pandemic. And they will still grow faster than those countries when we come out of it. But the problem is a numberfold. So one is the pandemic itself. And so managing the pandemic, not just coping well in its initial phases, but managing this long process over many years of getting your economy going and introducing all of the changes that needed to be introduced to stop multiple outbreaks. It's pretty clear that rich countries with capable governments and plenty of money to spend are struggling with that. Look around Europe, look at Australia, look at what's happening in Hong Kong. But it's particularly difficult for emerging markets. So look at Brazil or India or Russia, all the countries that were previously described as the BRICS have been hammered by the pandemic and are really going to struggle in its aftermath. So that's one thing. There's going to be a kind of hit from the pandemic. But then the second problem is that we are entering an era of declining globalization. And it was really the golden years of globalization before the financial crisis, which gave emerging markets, led by China, but not just China, this huge boost as they integrated into the global system. They found it much easier to get foreign capital. They introduced growth enhancing reforms, the whole range of different reasons, the technological changes. But the point being that those changes that came with globalization are going to get undone as globalization begins to decline, particularly in the aftermath or in the shadow of the US-China sort of geopolitical rivalry. So bring those two things together, and it doesn't matter, there are going to be some emerging markets that will continue to do better than others, and some, I think of maybe a country like Vietnam in this part of the world, that will still probably do pretty well. But the idea that most emerging markets can hope to catch up very quickly to the richer countries, I think we might see that not as a natural trend, but actually as an aberration over the last 20 years.
And I want to look at both of those arguments that you've just made. Before we do that, it seems to me that both the problems that you've described, managing the pandemic, declining globalization, those are fairly global problems, right? So all countries in the world will be facing these problems or are facing these problems. Is it just that emerging markets are worse equipped, in your view, to deal with them, or are there also specific issues that only emerging markets are facing, which, for example, a rich country or a very poor country just does not face?
Both. So emerging markets have fewer tools. They don't have, they tend to find it less easy to borrow large amounts of money. Their central banks typically aren't able to do as much unorthodox monetary policy, although you've seen a country like Indonesia doing some fairly unorthodox things in the last few weeks. They tend not to have as well-funded healthcare systems. So they will find it harder to manage this pandemic response. Doesn't necessarily mean that it's a fait accompli. You've seen very positive stories in places like the Indian state of Kerala that have up until this point managed the pandemic very well, but it just means it's harder. And in a sense, the pathway to rapid economic development that particularly in Asia and that many countries have followed in Asia was inherently wrapped up in globalization. It was to do with investment in infrastructure and manufactured exports. This is how China, but also the Asian tigers and countries like Malaysia and Thailand have grown prosperous. And so if that path is less open now, not for any reason to do really with the pandemic, it predates the pandemic, maybe is accelerated by it, but if that path isn't open, it just means it's proportionately harder for an emerging market to kind of clamber up in the way that countries that began their growth journey in the 1990s or 2000s managed to do.
Let's briefly talk about the two arguments you've made before. The first one was, those countries are finding it comparatively harder to fight the pandemic, and you listed a bunch of examples where that's certainly true, such as Brazil, India, at least parts of it, South Africa. But there are a few notable exceptions in both directions. So one, there's rich countries like the US that are having trouble managing the pandemic as well. And there are some countries we would, I guess, normally think of as emerging markets. You mentioned some of them already, Thailand, Vietnam, that have actually done very, very well managing the pandemic. So can we really say, what's the argument that at least in the long run, dealing with the pandemic will be so much harder for emerging markets?
Well, I mean, I think you're right. There's a distribution of countries. And in a sense, what's happened both in the aftermath of the financial crisis 10 years ago and now is all countries are growing more slowly than we thought they would. So the World Bank estimates used to think that the average emerging market could grow at 6%. They now think the average emerging market can grow at 4.5%. The average developed market used to think it could grow at 3.5%. It's now nearer to 2%. So all countries are growing more slowly. And there are going to be outliers. I mean, so it's interesting to look within Asia that in a sense, I think one of the outcomes of the pandemic will be a deeper divide between Southeast and East Asia, where East Asia has done pretty well throughout the crisis. In fact, probably the most successful region in dealing with it. And it has the benefit of China, which is the only economy in the world that is going to avoid a recession this year, or the only one of any consequence. But if you look at South Asia, which is where I used to live and where I wrote my book, The Billionaire Raj, about, which has a big place in my heart, South Asia, unfortunately, is in a much more difficult position. And that's not just India. Pakistan is also struggling. Bangladesh and Sri Lanka have many of their own problems, although Sri Lanka's record on the pandemic actually hasn't been that bad. But the point being that South Asia embodies almost all of the problems that I talked about. It has problems of state capacity, so it's hard for the government to get this under control, doesn't have very good hospital systems, doesn't have much fiscal headroom to spend lots of money, and it's waiting for this opportunity to, in a sense, go through the spurt of growth that China went through, and it's now going to find it harder. Now that, again, doesn't mean that this is a kind of fatalistic outlook. It means that it makes it all the more important for countries to bring in the kind of economic reforms and good government that will attract international investment and improve their own domestic positions. And it means that countries that do manage to do this, and Vietnam is one that I mentioned before that has a reasonably good record and also stands to gain from the US-China difficulties, that they will come across, they will reap the rewards of that maybe even more than they would have done before, because they will stand out amongst the crowd. But just in general, if you're a Cambodia or a Vietnam or a Kenya or a Uganda or some of the countries in Latin America, it's going to be harder to join that fast-growing group, and the group is going to be much smaller than it used to be.
Let's talk about your second argument about declining globalization, which will adversely affect the emerging markets, or at least some of them. And here again, this is an argument we've heard a lot. We've heard that globalization was in decline after at least the financial crisis. We're hearing it, of course, again now. I have incidentally spoken with two people over the last months. They're also both based in Singapore. They're actually also both associated with the Lee Kuan Yew School, who both have argued that globalization will be just fine, and that all the worries that we see now of globalization declining are unfounded. And there is an argument that what's happening now may even be beneficial to some of those emerging markets countries we're talking about, as perhaps some of the manufacturing, some of the supply chains are shifting away from China, both because companies see a risk in them being concentrated there, but also because China has actually moved up the ladder considerably, so may not be the best place for some of those manufacturing jobs anymore at all. So what makes you so certain, one, that we are seeing declining globalization, we'll see over the next few years, and B, that this will be inevitably detrimental to the emerging market countries?
Right. Well, I suspect I have a guess. I know who you're talking about there, but there is a kind of bull case for globalization, which rests on technology isn't slowing down, and technology was always the original driver of globalization. Policy followed behind, and so starting with containerization in the 50s and 60s and moving on to basic things like email, fax machines, and databases. These were the things that allowed you to take factories that used to be in Germany or the American Midwest and move them to China or to Thailand, wherever it might be. And so technology isn't slowing down. Technology is also going to open up a whole wave of potential globalization in the services sector. So white-collar globalization as opposed to blue-collar globalization. And assuming we get through this pandemic period, then the notion that you're going to see a radical drop-off in people movement also is at least questionable. I mean, projections of how many people are going to be moving around the world in different forms also tend to go up over time. That said, I mean, the evidence on kind of the traditional measures of global flows, so trade flows, foreign direct investment, and such like, has been declining since the financial crisis. And obviously a lot of that has fallen off a cliff since COVID. And there's a particular focus on what the economists call global value chains, the systems that particularly big multinationals use to move goods around the world. It's been the construction of these things, the globalization of Nike or Boeing or Apple, that were the high point of globalization. And it's these that look like they're going to decline. They're going to shorten. Some companies are going to bring production closer to their home bases, or they're going to regionalize it. Now, why is that a problem for emerging markets in particular? Because if you're a country like Cambodia and you were looking for your little niche within one of these global chains of production, when they start rolling them back and becoming smaller and less complicated and more localized, it's just harder for you to find your place in it. And therefore it's harder for you to use that springboard of manufactured exports, which many of the other Asian economies have done. So again, I don't want this to be a counsel of despair. I think globalization is going to decline. I don't think it's going to collapse. I think some smaller number of countries that manage to bring together the package of economic reforms, good leadership, state capacity, competent economic policy. If you can bring that package together, as a country like Vietnam, for all of its autocratic politics appears to be doing, then you still have reasonably good prospects. It's just going to be harder to do it because you don't have the following wind of globalization behind you as you did from, let's say, the 1980s through to the end of the 2000s.
Let's stick with this point for a moment. So it seems to me that you're right, that we kind of assumed for a very long time, at least implicitly, that these emerging market countries would just continue to grow more or less at the pace that they were growing until they had sort of more or less caught up. And in effect, for a period of time, that's also what the data was showing, is that these countries were sort of closing the gap to some of the rich countries, at least over time. Now, we've been talking a lot, of course, about the pandemic and its effects, but I wonder to which extent this phenomenon that you're describing, where emerging market growth is slowing down and some of these countries will actually not be able to catch up and in fact may fall even back down in terms of their average income levels, to which extent this may have been inevitable. So what's the real sort of effect of the pandemic, and to which extent this is just an unusual period of growth that had to come to an end anyway, whether it was through a pandemic or through some other event.
That's a really good point. I mean, this predates the pandemic. So what the economists call the conditional convergence model of economic growth, where the idea is that conditional on certain factors, poorer countries will catch up with richer ones. And you hear people talk about this catch-up growth, the kind of the early stages of industrialization, which is meant to be easier, assuming you follow the right steps, than working out how to grow faster when you're at the technological frontier, like a country like Switzerland is. The evidence is that that phase of catch-up growth actually was petering out well before the pandemic. And so what effect is the pandemic having? I suppose, as with other things, it's accelerating that change. But there's a lot of other things going on here as well. I mean, if you just think of the globalization that we were talking about, the reason why emerging markets were attractive initially was because they had cheap labor, and to some degree they had supportive policy and infrastructure. I mean, this is what China could offer to Western companies. Before the pandemic, that the value of that cheap labor was declining, and there are a whole range of other technological changes wrapped up in what we call the fourth industrial revolution with your neighbors in Switzerland, the World Economic Forum. That, in a sense, is much more likely to be driven by rich countries. So a world of software automation or the Internet of Things, the kind of innovations that are coming out of this are being driven by rich cities and rich countries with high levels of education and scientific development. So a country like China, for instance, which is still an emerging market, but a rich and prosperous and unusual one, I think is much more likely to drive innovation in that world than a country like Bangladesh, for instance. And so there are other changes going on in the nature of the world economy, which I think are in a sense going to benefit rich countries as opposed to poor countries. Again, none of this fills me with great satisfaction. I mean, you don't want it to be a world in which it's harder for the gains that have been made by emerging economies to stop continuing. And one of the great kind of arguments made by backers of globalization is that this has been a very positive period for emerging markets. And I think it's just, you have to look clear-eyed at what's coming down the tracks. And not only will this period be one in which many of the anti-poverty gains that emerging markets have made are going to be reversed, unfortunately, simply because of what's happening post-pandemic, but also the ability to catch up, I think, is going to be limited.
We have 10 minutes left on the clock for this conversation. So before I ask the remaining few questions, I just wanted to remind everybody dialing in that if you do want to ask your own questions to James, you can do so in the upcoming members-only Q&A session that will start at 9 a.m. I'm, again, posting a link to the public chat here that will tell you where to sign up. Again, you have to be a member to register. But if you are and you haven't signed up for this yet, please just click on this link and one of my colleagues will send you a confirmation link in the next few minutes. So James, let's maybe look briefly at possible political ramifications. So I would posit that if what you're saying turns out to be the case, and if these emerging market countries are actually doing significantly worse over the next years than they were used to doing over the last, let's maybe say 10 to 15 years, that this may also lead to a lot more political instability in those countries, and by extension the regions that they're in, because a lot of the ruling class political elite in these countries has withdrawn its legitimacy, maybe less from democratic processes and more from the fact that they have managed to deliver growth and growing average incomes. Is that a reasonable assumption? So will this also lead to political instability, perhaps even revolutions, topplings of governments, and perhaps even war?
Well, I mean, that's a few steps down the line, but I think the basic thrust of your analysis is right. So again, it's a paradoxical moment. If you look at the world's two biggest emerging markets, China and India, the ones that really matter, then their leadership is almost unprecedentedly popular as far as one can tell. So Narendra Modi, for all of the difficult situation that India is in economically and with the pandemic, insofar as the opinion polls are to be trusted, has a public opinion rating of 75–80%, vastly higher than almost any other democratic leader. And Xi Jinping, very difficult to judge because obviously you can't have opinion polls, but from what you hear, he remains a popular leader in China. So it isn't as if these countries are suffering a crisis of legitimacy at the moment. In fact, quite the opposite. You might look at the rich Western countries and say that they're much more politically unstable and their leaders are much less popular. However, you're right that in a sense, in many of these countries, there has been an implicit social bargain between the leadership and their publics, which is that that this growth will lead to a more prosperous middle class, the kind of lives that people would like to live. And so, although we're not talking about a long-term crunching recession, but let's say you are the average emerging market country and you're now growing at 4.5% rather than 5.5%, whatever it might be, then that means that there's a little bit less money to go around. And so governments are going to be a little bit less popular. They're going to have less money to spend on the things that the public goods that their middle class voters want. And so, yes, that I think does make it slightly more likely that you will get political instability, and also that they will need to seek alternative sources of political legitimacy. And the most obvious one is a form of nationalism. And that, unfortunately, I think is the world that we're heading into. And you can see that all around you, unfortunately, that there are many fewer political leaders you can point to who are kind of technocratic reformers, and many more who govern with various stripes of nationalism. And that's true here in Asia as it is in other parts of the world.
You've mentioned this a couple of times in this conversation already, of course, that not all emerging markets are created equal, and there's vast differences between those countries already, and there's likely going to be some that fare better in this new world and others that fare worse. And we, of course, don't have time to go through a country by country analysis today, but just briefly, you've mentioned Vietnam as a country that it sounded to me you felt a little bit more optimistic about. Which are the other countries that you think have a better chance of weathering this crisis, and maybe what are the ones that you're really worried about?
Well, I mean, I think actually Asia in general, in the kind of universe of emerging markets, doesn't look too bad. So we've already mentioned Malaysia and Thailand that have done reasonably well during the crisis. Vietnam looks pretty positive. Bangladesh is still, is sort of in that South Asian bucket, but has been growing remarkably quickly over the last few years. And so I suppose also has a slightly autocratic government. And so there's a chance that might continue. In the pandemic terms, the worst performing countries have been in Latin America, which is a region that I know much less well, that also has a long-standing problem of not being part of the group, with the exception of a few economies like Chile that have managed to perform this feat of catch-up. I mean, a country like Brazil, although it grew very rapidly during the 1970s, has basically not managed to catch up with an economy like the United States over the last 20 or 30 years. But as I say, for those economies that can get this right, then there is a dividend at the back of this, because there's still a lot of investment to go around. We still live in a world in which borrowing money is effectively free. There's still a lot of foreign capital that's going to be looking for good places to park itself. I mean, if you look even in a country like India over the last few weeks, you've seen Western technology companies piling into the company set up by billionaire Mukesh Ambani. So Google just put $10 billion into India, said it was going to put $10 billion into India, some of which goes to this company. Facebook has done the same, a lot of private equity companies. So there's still a lot of investment looking for opportunities, even in a world of deglobalization. And it's more likely to go to those smaller group of countries who can in a sense manage to put together an attractive package than it is. It's going to be more difficult for your mid-ranking journeyman emerging market, I think, to make itself an attractive prospect.
Mm-hmm. The series that we're doing here is called The End and the Beginning. So we've talked a lot about things ending now. To end this conversation, what are the things that this development will not able to begin? So what are the new things that we will see emerge as a result of the emerging markets ending?
Well, I think one of them is, in a sense, what we're doing now. So, which is speaking to one another on Zoom. So, as I said earlier, one of the sort of changes in globalization that we've been waiting for has been a much more globalized approach to white collar work, to services work. So, in Switzerland, in Geneva, the economist Richard Baldwin, who works there. He has written a lot about the fact that technology is soon enough going to allow you to take work that's being done in rich cities like Zurich and do a lot more of it in emerging markets. And so that is a potentially quite exciting prospect if you're in a country like India or the Philippines, where you have a large English-speaking population, relatively tech-savvy. And so, there are opportunities that come out of this moment. The pandemic has pushed us to cross a lot of boundaries that inertia has stopped us going across. So if you think about areas like electronic learning, I work in a university, this is a huge change, this sweeping through global education systems that the technology has been there or thereabouts for a while, but it hasn't quite happened. Electronic health, the ability to consult with doctors, get home deliveries, do all sorts of different things online, again, being pushed forward by the pandemic. There are places within this new world that nimble emerging markets are going to be able to take advantage of. And so those who argue that, in a sense, globalization isn't finished, there are many more steps in this journey to come, are exactly right. It's just the case that in the round, it's still going to be a little bit harder than it used to be for countries to in a sense rocket upwards and hope to join the rich world in a generation or less, which was what a country like Singapore, where I'm sitting now, managed to do.
All right, James Crabtree, thank you very much for this. This brings us to the end of this first part of the conversation. Thank you, everybody, for dialing in. This is the first episode of The End and the Beginning, which is our summer series. The next episode will take place 1 week from now on Thursday, July 23rd, that time at 5 p.m. Switzerland time, with Chinese philosophy professor Bai Tongdong, who will argue on the end of democracy. So that's going to be an interesting one as well. And if you haven't signed up for this, please do so on our website. Thank you very much for joining, and have a wonderful day.